People often treat old age security as an afterthought. The problem is they take it as soon as they can, and they end up losing some or even all of the benefit. Let's take the next few minutes to walk through your options for when to start receiving old age security and how to avoid the big tax surprise. Whereas Canada Pension Plan is based off contribution history, old age security, or OAS, is based off residency. So if CPP feels like what you've paid into it while working, old age security feels like how long has Canada been called home. You generally qualify for a full old age security benefit if you've lived in Canada for 40 years after the age of 18. If you don't quite have that, don't worry, you're entitled to a partial benefit that is simply the number of years in Canada after you've turned 18 divided by that maximum of 40. And so, for example, let's say you've lived in Canada for 30 years, you're entitled to 75% of the maximum benefit, which at the time of recording in early 2026 is $8,907 per year. There are minimums that need to be met. If you apply while living in Canada, you need at least 10 years after the age of 18. If you're outside of Canada when you apply, that number increases to 20. If you have significant years lived outside of Canada, don't assume you're out of luck. Canada has many social security agreements with other countries that oftentimes the combined years help you qualify. So when can we actually start receiving old age security? OAS starts at age 65. Like CPP, there is a mechanism there to defer out to age 70. And if you do, there is a 36% permanent increase to your old age security benefits. Unlike CPP, we can't start any earlier than age 65. If you haven't watched our video talking through all of the considerations around Canada Pension Plan, we'll leave a link down below. A little detail that a lot of people miss: if you are over 65 and didn't automatically get registered to receive old age security, you can go and get a retroactive payment for up to 11 months. Let's dive into one of the bigger considerations with old age security: clawback, or more formally known as the pension recovery tax. Essentially, if your income is above the threshold, you lose 15% of every dollar that is above that threshold. As of 2026, that line in the sand is $95,323. If your income is approaching $155,000, you'll notice that your old age security is fully clawed back. That's where the tax surprise can happen. You can be having a normal retirement with leveled income and going through the sale of a business, incurring a large capital gain, or for whatever reason needing to pull out of RSPs can cause your income to spike, forcing you to lose that old age security unexpectedly. For higher income seniors, this can be a planning opportunity. If we know that old age security clawback is going to be pertinent throughout retirement, there's not much opportunity cost, if we know it's already going to be gone, to defer out to age 70, which brings, again, 2026, we go from $8,900 to just over $12,000 if you defer to age 70. And what that does is it allows you, with higher income, to hopefully capture some of your old age security benefit. Will it be a substantial amount? Probably not. But if we are going to incur clawback regardless, leaving $3,000 or $4,000 a year on the table for a decision that has no impact today isn't small potatoes. Quick note on Guaranteed Income Supplement, GIS. It is tied to old age security. If you are not receiving old age security, you won't receive Guaranteed Income Supplement. And so I know a lot of our viewers won't be eligible for GIS. However, if you would qualify, and it is heavily income tested, if you would qualify, that is an extra consideration for when and if you should be receiving old age security as soon as possible. We have seen in recent years that more support has been offered through the old age security program as well. Through COVID was a great example where the one-time seniors benefit payment went out through the old age security program. If you were deferring old age security at that time, you wouldn't receive any of those support payments. We know spreadsheets tell us that deferral often makes sense. We also understand that life sometimes looks different than a spreadsheet. If your cash flow needs require you to apply for one of the government benefits, we oftentimes suggest old age security being the first that gets turned on, both to access government support if it gets flowed out that way, but also CPP has an increased deferral benefit over OAS. If you learned a little something about old age security today, hit the like icon, click the subscribe button so you never miss another Pellegrini Financial video.